Hello there, everyone, and welcome to your special presentation titled Bargain Hunting for Blue Chip Stocks. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to bring you this presentation. Hopefully it ends up being a very timely one. We're trying to get in front of the ball here a little bit as best we can, because I know the number one thing, I think, on everyone's mind right now is, gee whiz, when is this correction going to stop? Because we've hit corrective territory at this point. And ultimately, then, what stocks am I going to buy to take best advantage of the current situation, right? And with the market kind of teetering still here, at least decelerating, I think that that's really the main thing that we see from a numbers standpoint, not a narrative and projection standpoint, right? We see a deceleration. And so now's not the time to be going ballistic with anything. Now's the time to be looking for some really good stocks on sale. And so with that in mind, we're going to point a lot of that out as we go through the rest of the presentation. What to look for and when to think about doing it, okay? So let's go ahead and take a peek. All right, so here we are at the home page. And what I'd like to first and foremost point out, potentially we're dealing with a blast-off day today, where the markets are finally beginning to claw back enough to where we need to sit up and pay attention. So the Dow is up 450 points, NASDAQ 300, and so on. And I know what you're thinking. We've seen some of these implications, particularly very early in sessions, even this week, where advanced decline was running more than 3. And yes, I saw them too, and started to nibble at a few things even then, right? But what we're really beginning to see now is something that's got potentially, a little bit more staying power to it, because it's holding on deeper into the session. And we even had a really bad, and I mean, compared to what was expected, really bad consumer sentiment report. It was a big miss. And markets have generally, after a very sharp, quick decline, have really kind of rebounded and held on to a lot of the early gains that the markets were seeing up to that 10 o'clock time frame. So that did put a damper on things. Otherwise, this market might really be running a lot stronger than it is even right now, okay? And that's indicative of kind of what we've seen throughout the week. There's a bit of a change occurring. Maybe we can get some continuation next week, where news are really starting to come in pretty good on switching this narrative, where both of your inflation measures this week came in a little bit soft, not crazily soft that would scare folks the other way, but coming back more towards where we want to see them, right? And so that's improving. We also had the aversion of the government shutdown. They often are averted, right? But that's come to conclusion. We're starting to see a little bit of come to the table with Russia and things like that. And we've got the Fed on tap next week, along with some retail numbers that are expected to be a lot better than the prior numbers from just the report before. So there's a lot of things beginning to stack up here. Now, we're going to talk about, we probably want a little bit more than just this one day before we get super excited about things. But I wouldn't blame you if you're beginning to think about sticking your toe in the water here, because I have been thinking the same. Right. So with all of that, let's just set the stage. Now, Glenn did a great job covering bottom fishing technique with the charts last session, our last special presentation. So I'm not going to go through all of that stuff again, more so just point out what's most important here. So I'm going to go right up to the top. We're going to go to timing, market timing graph. And we're actually starting to see some pretty good things develop at this point. So the one pause and hesitation I would point out pretty quickly is we have not yet been able to stack together 2 green days in a row since back here. And that one didn't even finish well, right? So really, our strongest patch in the market at this point was back in mid-January, where we got going for about 6, 7, 8 days there, right? So we got to walk before we run in this case. And I love the change in sentiment at the open. Of course, I loved the change in sentiment at the open a couple days ago, right? which was quickly met with selling. I mean, just 3 or 4 minutes into the session, unfortunately, right? But we look at what's happening today, it's continuing to push. So this is a big change from even the nice reaction to that initial CPI report earlier in the week. And so I think that earmarks a pretty good change in sentiment beginning to brew here, okay? And you got to think, sure, the tariffs have created a lot of uncertainty, but uncertainty can only take you so far. And I was looking at the IXIC down almost 14% if you go back into last year, and seeing, the VectorVest Composite down more than 11.5%, I think at one point yesterday. And you start to think to yourself, okay, market's correct, a good, reasonable amount of time, just that's normal market behavior. And so we've kind of gotten into those levels and a little bit below. And so until things are more sure that we're actually going to have some kind of meaningful earnings recession, or more sure that these tariffs are actually going to create the consternation that everybody's saying, I think largely there's some opportunity for some bounce here. Now, I don't think this is a bottom fishing opportunity of a lifetime or anything of that ilk, but there's certainly some opportunity for some bounce, and some fairly significant bounce, even if it's only for a few short days to a couple of weeks, type of thing. So with that in mind, when we look at the current formation here, prices now, not only did they have a strong open, but they're set to at least potentially close above the range for yesterday. And this pattern is known as a one white soldier, should that occur. And that is one of the stronger, if not strongest, 2-bar reversal patterns. And boy, we haven't seen one of those in quite a while. Okay, so this is a significant pattern to be observing, all of that. Now, that pattern requires confirmation. And since we haven't been able to string together 2 up days, and the market, even when it looked like it might get going a couple of days ago, didn't, I would say looking into Monday, a lot of good things could happen. Okay, so if we're able to push again Monday, we start looking at primary wave change, because we'll be working off 1, 2, 3, 4, 5. You'll be working off 67.15 on Monday as your barometer for primary wave change. Heck, we might get to that level today. It just depends, right? So you'd be in a position where primary wave could already be up at the open Monday, right? Then, you might just be looking for 10 o'clock confirmation that the markets are still rolling as sort of your latest entry on bottom fishing opportunity, to be honest with you. That's what we've always taught. Blast off day, which today potentially could be, all the way up to primary wave with confirmation at 10 o'clock the following day, if that happens, later in the day. Or, in the case here where you might open with a primary wave up, I'd just be looking for confirmation that day, So that would be the first time in a long while we've at least had 2 up days, and momentum and things are really starting to change. So it's worth taking the risk, because stock prices are low. Stock prices aren't high right now. Stock prices are a lot lower than they were. So proof is in the pudding there. Let's go take a look. If we go over to Unisearch, for example, first thing I'm going to do is just kind of show it to you. We have this searches bottom fishing folder, and in there, you have everything from blue chip searches all the way down to far more risky, even speculative type stock selection strategies like a jailbreak and a Russell 2000, those kinds of things. Let's start with the blue chips, because if it's my money to put at risk, given the fact that markets are at least decelerating in terms of earnings, it might make some good sense just to got to get the search parameters in there. Might make some sense, just to stick with well-established names, because you're going to be getting some terrific opportunities in a lot of these stocks. And we can see some of these are beginning to snap back quite sharply today, right? EME up 3, KKR up 3, 5 on block. All right, so let's look at, and these are blue chips, so these are stocks that don't hit those kind of watermarks on a regular basis. All right, so let's view the stock graphs. And when we do, look at this thing. All right, so I know that there's been some bad press. The situation's not nearly as bad as even SMCI was, right? And that situation got resolved. So here's the drop. the drop's gone from 140 roughly all the way to 54 roughly, right? So that is a massive, massive drop in stock price. That's going to create some opportunity. Trade Desk is a beautiful product. Look at the earnings down here at the bottom. I mean, ultimately, that's the engine that drives the bus, right? And while earnings have softened here, right, and there's been a little bit of an issue, has it changed the outlook on Trade Desk this much? That's for, us to decide. But based on earnings and based on just give me the facts, ma'am, you got to believe that you're starting to get to some pretty rich and interesting prices on even something like Trade Desk. Now, if you want to kind of stay out of that mess, look at Deckers. Deckers, the earnings is even stronger, right? And the drop is pretty close to the same kind of situation. You're getting awfully good. Look at the value. Value here is tracking $193 a share. That's what VectorVest believes it's worth, based on earnings growth, and even working, against the company's interest in inflation. So the hurdle rate, and looking at the company, its earnings power, both internal and external, and even its detractors, inflation and interest, this company is still worth $193 a share. It's currently tracking 118, right? So that's sort of an ultimate bottom fishing opportunity. Look, earnings growth is 23% a year. Okay, a lot of companies would kill for that. Here's Block. Block's already starting to turn up at a major support level with even stronger rising earnings on a current basis and an earnings growth of 34%. Look at the value there and compare it to the price. Okay, and so these are the kinds of things. Some of them are going to still be trading over value because they're blue chips, and they always trade over their value. But there's even some in this list that are trading significant discount to their value, being a blue chip caliber stock. All right, let's go to look at some history, because pointing that out I think is eye-opening. And some of the things that I want to address that I hadn't thought to address yet, these stocks, as you can tell by just nature of the chart, they're going to be sell recommended. You don't want to do this on a confirmed up call. They're still sell recommended at that point for a reason. And some of these have reason to be sell recommendation. But when the market turns and you have a major market pivot, these are the kinds of stocks that can explode up the page, at least, explode on the blue chip level. You get into, Russell stocks, they can be far more explosive. Get all that, right? And hopefully you do too. But these can significantly outpace the market and outpace that whole idea of just buy a little bit of the S&P every month. So let's go take a look at that. I'm going to go to timing, market timing graph. And last couple of times we set up, we're back here. Market, boy, it was kind of almost a flash crash, that one, but that was enough to put the buy to sell ratio below 0.2, as Glenn discussed last week, into 0.17 territory there. Sharp snap back. A lot of the similarities we're seeing today were found back here in terms of the explosiveness and the amount of stocks participating and all those kinds of things on August the 6th. So we'll remember that date, August the 6th of 24. And if we want to go back even prior to that, here you didn't even have quite as strong a change in sentiment the first day. You had what's called a bullish harami, right, where the body is inside of yesterday's range, but major sentiment is occurring, and really got far more explosive on the 31st, so 10/31. Okay, and boy, this is what you hope for, is markets really go up from there. Sometimes they're only going to go up for a couple of weeks. That would kind of be my expectation, kind of ultimate expectation on the current campaign. Markets are a lot higher than they were back here in October of 23, right? So all bottoms are not created equal. And the lower the buy-sell ratio goes, by the way, typically the sharper the rebound. So, a BSR reading of 0.05 is going to have a lot more potential than a BSR reading that got down to 0.17 or 0.18. So all that being said, probably have somewhere between a mild to a moderate bottom fishing opportunity here. And again, I think that makes sense in terms of stock selection being more blue chip type oriented. But at the end of the day, the proof is in the pudding. So hopefully you remember the dates, August the 6th and October 31st of 23. Okay, so we're going to go back into Unisearch. We're going to start with August the 6th. And when we run this, you got to remember this is at the close this day. So really this could be run as of August the 5th if you were somebody that wanted to jump in more towards the opening levels. Okay, there's going to be slippage either way. And I think largely getting into any of those discussions misses the point completely. Your point is not to try to exactly replicate, it's to give you an idea on what kind of performance you're dealing with, right? So if I go to the top here though, and just quick test the top 10, we're going to take this back to just a couple of weeks because really that's the sweet spot for your bottom fishing endeavors. And generally, you can even go to the 2-day tape from this past seminar that's already been recorded from Tampa this past year if you have access to that. And I said this then, you know, your opportunity is really no later than the primary wave up with confirmation, but as early as the blast off day off the low, yeah, all the way up to the confirmed up call. That's where most of the money is on bottom fishing. Then you want to switch tactics. Then you want to get, you know, back into tried and true successful investor, you know, all that kind of stuff. All right. Now, when I run this test, look at this. So 11.5%, S&P did 7.25. Okay, so we're outperforming with blue chip stocks. We're outperforming the benchmark, which is the S&P. Okay, that's the message. And you know, roughly all of the blue chips did roughly the same because there's a lot of overlap on the stock selection, and there's also a ton of overlap on the fact that they're blue chips, right? So you can't expect that any one of these blue chip scans is going to triple or quadruple the S&P. You get up near 2 times S&P, you're really cooking, okay, with blue chips. Let's go to best of the biggies. Quick test that one. And so just test after test, right? This one had a loser, DXCM. And this is with no management. You know, we typically like to use fairly loose management on these. We teach, 20% stop loss, 50 to 100% targets. And largely, I end up exiting these largely based on just market situation for the most part, where, again, confirmed call comes in. I start looking at tightening stops significantly on these things and just getting into the best quality stocks I can at that point, that I'm not counting on this, sharp bounce off of the lows. It's just a different market situation. All right. So anyway, if you wanted to take some more risk, you can try, right? So we can look at things like S&P, if I wanted to go after that. And it did a little over S&P benchmark. Okay. So another indication that blue chips have really been what people have been keying in on here as of late, as the underlying fundamentals have begun to at least decelerate. Right. So I'm trying to also build up a case and point for my argument of thinking about blue chips here. Like if we go with riskiest strategy we have in bottom fishing, that's jailbreak, it didn't do much at all because nobody wants to buy $1 and $2 and $5 stocks right now, even back in August of last year, because there was a lot of uncertainty then, right? So I just think blue chips is probably the way to go. Now, there are some that are showing up here over this week, Oddfellows long. But here again, you're dealing with a pretty decent mix of better quality stock, So you're getting up into the 60s and hundreds even, and you don't see a lot of $1 and $2, right? Pirates long is one that typically does really well and has more of a moderate feel to it. So I want to point some of these out just in case some people want to take a little bit bigger swing at things. You can do that and not be totally out of whack with the market right now with something like a Pirates long, because you're getting reasonable stock prices and not taking on exorbitant amounts of risk right now. Now we get a BSR of 0.02 again. You absolutely want to be thinking about jailbreak and Blyer's bottom feeders and some of the very most aggressive ones. But when we're just kind of barely broaching these bottom fishing levels, blue chips tend to make a lot more sense, as there's a little bit more uncertainty as to how far that snapback is going to be. Okay. All right. So let's go back. We'll go back again. We'll go back to, this time is October of 23, I believe, and the 31st. Hopefully you remember that. So again, this is after that day is done. Wow, look at who's showing up here. But let's go to the one I started with, because this is the one that's been showing up here recently in the Derby. So we'll start here anyway, as one of the better blue chip ones, okay? So NVIDIA obviously led the charge. SMCI did a pretty good job there, and so on, okay, down the list. And with a little bit of management, we can potentially knock some of these losers out. Certainly ALB, because it went below even the very loose stop of, say, 20%. And at the same time, probably would have bagged some returns, potentially even earlier on a couple of the big winners, okay? But bottom line, significantly outperforming market again. And so you can just kind of go through test after test, and blue chips are beating the pants off of the S&P. In this case, this one here, RT, did not, right? So even more reason to think about this variety, where it's an even better quality stock. You have a relatively high VST compared to that RT rating being so low, okay? So it tends to soften the RT blow a little bit, and also make sure that the overall quality of the stock. Look at the RVs on these things: 156, 159, 162, 135, 164. I mean, that's, these guys have, look at the growth rates: 34, 30, 38, right? So again, we run that current, and that's kind of where I'm going to end and wrap up, because as usual, I mean, I could fill 5 hours with this kind of stuff, if time would permit for that. But everybody's got things to do. But you look even now, and even as things have decelerated, 24, 23, 34, 22, 19, 24, these are the kinds of stocks that can still give you far better than average returns, and they're significantly still outpacing inflation and interest, right? So these are the kinds of stocks that people are going to be looking at if they're going to be buying stocks. They're going to be buying stocks that give them potentially a nice reward for taking on some of this risk right now. Okay? All right, so that's going to be it for today. I hope you enjoyed it. I hope I've stimulated some thought at the very least, and we hope that ultimately it's going to be very timely. We'll see. Certainly is beginning to look like today could be that blast off day, and looking Monday to be a little bit more sure, because we haven't had 2 up days in a row for 7 weeks. Also not a real bad idea. So this hopefully is going to be very timely for you, and we'll just have to see how Monday goes. Okay. And do tune in to your daily color guard reports, and do get in with your coaching groups, and we can always help answer some questions there. All right. We'll see you guys very soon. Best of luck, and we'll see you next time here at VectorVest University. See you then.